Evening, gents and fine ladies. 7th of September it was, and we did a clip about the DAX, highlighting the structure that you see that I was pointing out here, and even more than that, a little bit of method in the right shoulder. So if we have a look at that, it looked something like I'm drawing it right here. Let me turn the volume off, and let's watch it at double quick time. There you go. How to watch Francis super fast. You should get one of these. I'm sure it'll be useful every now and then. And there you can see how that structure looked. Let's take a little look how it's all panned out. So this is the German DAX index. This was a video we did on the 7th of September. Today, of course, 7th of December. So kind of symmetrical. Exactly 3 months on. How's she done? Not done too bad as far as it's concerned. This is the whole story. This is our setup. So this particular structure that you'd seen was beginning this fall here, made its first interim pull back into our funnel. So let's just talk about this as the inverted HVF. You won't know too much about that without a program, but that was the run of our second interim. Bit of churn, a little bit of a wind up, another dip lower, and then some churn, and then last few days, this is a daily chart, 1, 2, 3, 4 days, all the way back from that little wind-up funnel. You need to drop the lower time frames to see that, smash through to the HVF target. Now this is actually a point where you could do a partial close, not a full close. Why? Because we've got the head and shoulders indicated by these left head and right shoulders on the DAX. So we call the DAX to go down, down, down. And we actually have a cluster of targets. Yes, a cluster here on the head and shoulders at the 10,407. So let me be clear. On head and shoulders, targets are made and often overrun. Why? Because this is a cyclical change in direction. So let's look at this on a bigger time frame so you can actually get a bit more context to this. Let's have a look at that. Massive upside HVF with the big amplitude generated by the 2008 to the lows of 2009 crash, which gave this line, which confluences with our head and shoulders line. Key levels of significance often confluence. Our straight line, which is the straight line method of HVF for utilizing head and shoulders, that nips the two shoulders, the logical round number that captures that most, 12,000. Surprise, surprise. Target back down. 10,400, which indicates that is around 1,600 higher, which would mean it should be 13.6, which it is at the high. So there's a nice geometry. Note after the target on your overperformance, you get your first real challenge to the super macro move up. That was you would have been taken out of here unless you'd done something ascending with that, and you'd pop up. You end up justifying and validifying, I suppose, or certain verifying, let's rather say that. I'm making up the language as I go here, on 12,000 just being run. Big, strong pullback all the way almost to the second interim. Much easier break apart from your revisit into the axis here. Otherwise, consistently up, pretty calm. After the second interim, little bit of a dip back, some vol, and then a final blow-off move before you get your first big down leg. And then all this is just a rising wedge, most of it in the ground floor part of the wedge going up, 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 ends up giving us the left head and right. That target, you could overperform a long way beyond that if you get a cyclical head and shoulder. You could have closed a percentage here, I would say 30. You could close another 30 down here at the 10,000, and you could trade for overperformance. You'd learn how to do that on a program if you so wished. Contact us at support@themarketsniper if you want to find out more on our self-study program. There may even be occasionally the odd slot available on the Trading Metamorphosis program. That we can't guarantee, and it's not for everybody, and requires a substantial investment. But that could get you into the community where we were originally discussing that. That's the Market Sniper. Let's have a look. Setups, when was the DAX? We posted this in our app. This is both a phone app as well as a desktop app. I'm on a super wide screen, so that's why you've got a bit of big buffers on the side here. But let's just go to general markets and let's have a little peek for the DAX in there, and you'll see how we do it. Multiple time frame analysis across the super macro, and then into it. This was the original setup. Nice WhatsApp chat for catching up and staying up to date, and good setup. You can subscribe to get further notifications. You can tell the rest of the guys you've taken it. That was the pattern as it was forming. Note how the poster, Ivan, big shout out to him, had identified the head and shoulders and was capturing the point as it was slipping down. So this was prior to triggering event, and then the triggering event occurring. And this is how you can look at it, and look at the big cycle. I've added that super macro in there as additional information for you because of that interesting confluence with the head and shoulders. That's why we do previous history. History is only useful for what it can tell you about the future. That's why I'm interested in history. That's why we draw old legacy patterns, and then you could participate in the chat here. So that's an example of one of the trades, and I actually gave that one away for free and mentioned it in this YouTube over here with the DAX, talking about the lower level to the downside. Okay, that's your quick check-in on the market sniper indices. We've been doing quite a bit actually, FX indices wise. Incidentally, I think this is going to be supported, wait for it, by a strong euro against the dollar. Mainly this could be dollar weakness. Go have a look at your euro USD. You get yourself a little free peek at some of the other things that we're looking at. Where's it? Somewhere here, there we go. Possibly a little bit of first structure and a new trend there. This could mean, given what's happened with the dollar and the back off of the Fed, surprise, you can't say I didn't warn you that they won't go very far with that interest rates cycle. Now suddenly talking the talk and getting some people to actually believe it, not something that I was in any way convinced of. They suddenly recycled. October, we're a long way away from a neutral interest rate. November, we're real close to a neutral interest rate. That was a slight change in tone, wasn't it? And you're sitting at 2.25. Neutral interest rates used to be somewhere between 5 and 6%. That's it ever since I was doing economics. And there were normal economies, but not in this debt-bombed realm. So they are cycling back on their aggressiveness of interest rate. That makes the dollar unattractive. You're a global hedge fund manager. You can have your money anywhere in the world. Why should you put it in dollars if the interest rates aren't going to keep going up? Why should you overpay for that? You can go back and put them somewhere else. Then the dollar's appreciation will go down, and that is probably going to help put a bit of heat back in there. Overpriced equity markets, which are so high, because if the dollar keeps going strong, it costs even more for foreign nationals and foreign money to come in and pump the equity market. However, if the dollar takes some of that global hedge fund manager devaluation in the easing of the dollar, then it doesn't allow, then you don't need as big a correction in the equity markets. We'll be watching the equity markets and the indices to see if in the US you get something similar to the DAX, which brings us back to the DAX, the head and shoulders and the cyclical rollover, and during this period of euro strength. But how long can the euro be strong? Not that long. Big problems, Italy, etc. It almost feels crazy to associate the two words with strong. I'm just talking in this contest between the two ugliest girls in the room. One is as ugly as a chimp, and the other is a monkey with two clubbed feet, and you've got to decide which one you're going to dance with. Well, it's the pig's chance to be less ugly, and that's where we're at. So this means the DAX will probably continue to correct to the downside because the euro gains strength. That also means German exports are not as cheap, etc. Okay, by the way, that risk reward to your head and shoulders, set to double quick time to keep the video not too long, 12.98 to the head and shoulders, of which 85% you've already probably made. By the way, you could continue to play for overperformance to the downside. That's your update on the DAX and the index. Enjoy your weekend. I'm Francis the Market Sniper, www.themarketsniper.com. If you want to understand more, become part of our awesome community, or just get onto our self-study program so you can learn the methods and all the magic that we work in the markets. And of course, we get it wrong loads of times too. With that, I wish you well and have a great time. Bye for now.